Hello and welcome to NewsCentre. I am Ashmit Kumar. Now, it's been more than 72 hours since the BJP Shiv Sena NCP alliance registered a landslide victory in the Maharashtra Assembly elections. However, the suspense over the next Chief Minister continues. Today, Chief Minister Eknath Shinde submitted his resignation to the governor as per protocol. The term of the current Maharashtra Assembly ends today. Shinde will function as the caretaker CM till the next leader is sworn in. Sources tell us that Eknath Shinde's Shiv Sena is unwilling to cede the CM's post to the BJP, despite the latter winning more seats than twice the number of the seats. Both camps are holding their cards close to their chest, insisting that a decision will be taken unitedly.
कि तीन पार्टी की सरकार है, महायुति की सरकार है, 14 करोड़ जनता के लिए सरकार आने वाली है। भाई जब महायुति की सरकार बनती है तो उसको थोड़ा टाइम लगता है। एक पार्टी की सरकार थोड़ी है कि आज के आज बना लेंगे। भाई थोड़ा समय जा रहा है, लेकिन जनता के हित में, महाराष्ट्र के हित में है। महाराष्ट्र को आगे लेके जाने के लिए है। हमारा केंद्रीय नेतृत्व और महाराष्ट्र के तीनों नेता बैठेंगे और मुझे लगता है योग्य निर्णय होगा। ऐसा निर्णय होगा कि महाराष्ट्र की जनता के लिए, विकास के लिए डबल इंजन सरकार जो चलेगी वो देश के हित, महाराष्ट्र के हित में काम करेगी।
सीएम साहब ने जो रिजाइन दिया है वो सीएम पद का तो है और पूरा मंत्रिमंडल का है। इसके बाद हमारे जो तीन लीडर है, एकनाथ शिंदे साहब है, देवेंद्र जी है, अजीत दादा है, वो पीएम साहब के साथ और अमित शाह साहब के साथ बात करके उनके मार्गदर्शन के नीचे हम सरकार बनाएंगे। हमारी महायुति कॉन्क्रीट है, मजबूत है, उसमें कोई दिक्कत नहीं है।
So the situation in Maharashtra has once again become extremely complicated, and that too despite a massive and a decisive mandate. Now what has happened is all three allies are unable to decide who is going to be the next Chief Minister of Maharashtra. This is what BJP has to say. The sources have told CNBC-TV18 that the BJP has offered Eknath Shinde a union cabinet berth, and they have offered that they are going to make his son Shrikant Shinde the deputy CM of Maharashtra. This is what Eknath Shinde's party has to say. Eknath Shinde's party has to say that the elections were fought on his face. He was the leader of Mahayuti, and the popularity of Eknath Shinde as the CM in the last 2.5 years helped Mahayuti win as many seats, these many seats. That's why Eknath Shinde deserves to be the next Chief Minister of Maharashtra. And RSS is also an extremely important key player here. Remember, it is RSS who secured all these seats for the BJP and Mahayuti as well. So RSS, even before the elections, was clear that if BJP gets even one MLA, a single MLA more than its allies, then the next Chief Minister is going to be from the BJP. Now, all the three allies are, of course, claiming that all is well in the alliance. But the fact is, the results were out on 23rd November, but Maharashtra is yet to get its new CM.
Right, so the suspense there continues. Moving ahead now, and what would come as a big relief for telecom players, sources have said that the Union Cabinet has approved the proposal to waive bank guarantee requirements. Sources have told us that this will pave the way for telcos to receive bank guarantee waivers for spectrum acquired before 2022. Telecom Minister Scindia had earlier said that a waiver, if any, would apply for the entire sector. The Cabinet has already waived the requirement for bank guarantees for spectrum acquired prospectively through auctions. That's 2022 and 2024 auctions. Now, the Cellular Operators Association has welcomed this move and said that the move will help reduce financial burden on the industry. The association added that this decision will enhance cash flow, free up capital, and enable capital expenditure in the industry. And well, for more on this, we're now joined by Balaji Subramanian, Vice President of IIFL Securities. Mr. Subramanian, thank you so much for joining us. First question, in terms of impact, what would be the bearing on the three telecom players with respect to waiver of bank guarantees? How much do they stand to benefit now with getting more liquidity, with getting their bank guarantees back for the pre-2022 spectrum?
Thank you for having me on the show. As far as this waiver is concerned, obviously the biggest beneficiary will be Vodafone Idea, because considering the large payouts that they face once the moratorium on spectrum payments is lifted from October 1st of 2025, the kind of bank guarantees that they would have had to post was almost 25,000 crores. and that number is much lower for both Jio and Bharti, around 3 to 4,000 crores each. That is because they have already prepaid a significant portion of the liabilities pertaining to the earlier auctions. So the biggest beneficiary will be Vodafone here. And in the case of Vodafone, it also assumes importance because they have been looking to raise debt funds for the past few months. They are looking to raise 25,000 crores of debt, and typically any lender measures its exposure to a corporate using the sum of funded exposure and non-funded exposure. Here, bank guarantees form a portion of the non-funded exposure. So if banks do not have to, provide guarantee to Vodafone Idea, that would mean that
Sure.
they would be having more capital to lend to Vodafone Idea in case they decide to go ahead and lend. So that means the debt raising process of Vodafone Idea also receives a boost.
Sure. Let me ask a follow-up question that does this action by the government on the policy front perhaps seem like an afterthought? In 2021, the government had clarified its position that, look, we're comfortable with the idea of not having bank guarantees prospectively. Should this have been something that was done back in 2021 and not wait till the end of 2024 to grant this relief?
So, that is something which can be always, debated. The thing is that, you end up taking a more incremental approach because back in 2021, no one really knew how things would pan out 3 years down the line because the AGR curative petition was dismissed in the interim. And there is also this increasing thrust on the government to ensure that there are 3 private players in the market. So I think, they could have always done it even 3 years back. But, these things, typically when a government looks at these things, it will be more incremental in nature rather than provide, use up all the bullets in one shot.
Right. Also, just looking at it from a face value, this decision that has been taken by a cabinet, on face value, yes, it's applicable across the sector, but it's not lost on any of the stakeholders that this move and benefits mostly, majorly, Vodafone Idea. Having said that, what does this do for the finances of Vodafone Idea, or does it require further policy impetus from the government? Is it required more perhaps in terms of a greater government stake, in terms of perhaps AGR relief? Are there more impetus required from the government to stabilize the ship, so to speak, for Vodafone Idea?
On the last earnings call of Vodafone Idea, the management indicated that lenders are awaiting clarity on 2 matters. One is the bank guarantee waiver, which has now come through. The other one is, what the government does on the AGR burden itself. The company had mentioned on the call that they have made representations to the government on the merits of the curative petition that they had filed in the Supreme Court, even though the court gave an unfavorable verdict. So they said that some of those arguments are still relevant, and they have requested the government to look into it. So of course we don't know what can be the kind of relief which the government can give, because on one hand you have to it is a balancing act. On one hand you have to ensure that Vodafone Idea remains a reasonably competitive third player, while on the other hand you can't risk the you can't run the risk of getting a contempt of court this thing. So I think the area where there is a clear flexibility for the government is to potentially extend the moratorium by a few more years.
Timeline.
So that means that, of course, the cash burden may not go away. It might happen 3-4 years down the line, but at least that will give some headroom for the company to mend its finances, raise debt, stem its subscriber loss, and complete its capex program.
Right, Mr. Subramanian. It's again a tricky task, a tricky balancing act for the government as well as for Vodafone Idea, taking a decision, one, of course, on the bank guarantee waivers, and the other, of course, on the AGR front. A decision is still awaited. We had questioned the minister last month. He hadn't given any clarity, had refused to comment on whether any AGR relief is in the works. Mr. Subramanian, thanks once again for joining us and sharing your perspective. But speaking of the telecom space, India is set to drive the 5G market in the coming years, with estimates indicating that subscriptions will go up to 270 million by the end of this year. And this number could swell to over 970 million by the end of 2030. A report by Ericsson Mobility has highlighted that data consumption per user is expected to grow exponentially to 66 GB per month. Betting on this growth, Ericsson Consumer Labs is now making a pitch for telecom companies to roll out differentiated premium plans for selected users. I caught up with leaders at Ericsson for a peep into the telecom crystal ball. Take a look.
Gaming is another big area. You have about 142 million paying gaming users in India that care about latency. That's another area. Content creators. We have about anywhere between 80 to 100 million content creators and influencers in India. Again, all of them care about uplink speeds to ensure that the videos go out in time. We are able to live stream and in high quality. We see that India by far is one of the biggest markets for Gen AI today. We see phenomenal sort of usage.
When you look at such peak demands, such uplink as well as downlink demands, is there a case then in such a situation to be where you have infrastructural spends required to deploy such differentiated networks? Is there then a case to be made that perhaps that burden should be shifted equally between the telecom operator on one hand and some of these large traffic generators on the other?
I think, as we have said, I mean, the opportunity is, for differentiated connectivity lies for all the players in the ecosystem, right? Whether you are big tech or you're a telecom operator, and the opportunity is much more in this space of network APIs, right? So, big tech can gain a lot. Big tech has global applications that they want to work across different networks, and they want a consistent experience for their users across these different networks. And now that with our new JV that we have, where we are aggregating all these network APIs, we are providing an opportunity also for the big tech players to actually play in this ecosystem. So we are inviting them to kind of ensure that they are part of this sort of ecosystem. So rather than this fair share, sort of argument, I would rather say that we're trying to be much more inclusive out here to ensure that everybody in the ecosystem can actually play in this area.
Last 1 year, more than 150 million subscriptions have been added in India. Right, and this is not going to stop. We are 1.1 billion subscription market today, and we expect to grow up to 1.2, 1.3 billion by 2030. So what we are expecting is that more and more of new 5G devices will come into the market, and I think India being a big market, what we are seeing is that the price ecosystem of the devices is also changing.
Do you see satellite comms acting as perhaps a headwind that perhaps could offer an alternative to the users, to the consumers?
So first of all, I think satellite has always been complementing the land networks, whether it was wireline or wireless. And I think this will continue to happen. Gradually, we were talking about big satellites, now we're talking about LEO and GEO satellites. So a lot of satellites are coming into it. But what sort of services get adopted by the consumer is a big question. Like what we are forcing is, basic services like voice, SMS, and maybe new services like IoT. That could be a pickup point because there is a device ecosystem onto it. Talking about subscribers going to, taking out satellite communication for their day-to-day operations, day-to-day data consumption, I think the price points and the market stability will talk about it in terms of future. How does it appear?
Well, with that, it's time now for slipping into a short break. But coming up, the government may soon allow 100% FDI in the insurance sector. Sources say a composite license mechanism may also get the green light. A special discussion when we come back. Welcome back. You're watching NewsCentre. Now, India's insurance sector is set for a raft of changes. The government is likely to greenlight 100% FDI in the sector. Currently, 74% FDI is allowed in insurance. Speaking at the CNBC-TV18 Global Leadership Summit a few days back, the chairman of insurance regulatory body IRDAI said that this is an opportune time to hike the FDI limit. CNBC-TV18 Sapna Das is reporting that the government is also likely to make a slew of changes to the insurance laws, paving the way for composite licenses. Before we go any further, here is the IRDA chairperson, Debashish Panda, on allowing 100% FDI. Take a look.
This has become the opportune time for having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write.
In fact, that interview was taken by my colleague Yash Jain, who's joining us now with a special guest to discuss this crucial development even further. Yash, over to you. Take it away.
Thanks, Ashmit. Joining me now to discuss this further is Nilesh Sathe, former member life insurance at the Insurance Regulatory and Development Authority of India. And what we're discussing here are two different subjects. One is, of course, the proposal to increase FDI in the insurance space from 74% to 100%. And second one is equally crucial, the Insurance Amendment Bill. To start with the proposal on FDI, Mr. Sathe, since we are speaking about taking the FDI to 100% from the current 74% in a sensitive sector like insurance, I want to understand from you, in your sense and your reading, should this approval be given through automatic route or, through an approval case-by-case basis by the government? And the second question is that when this FDI limit was raised from 49 to 74%, not much happened in terms of action and interest from foreign guys. Now, when the proposal is expected to be raised to 100%, do you expect significant interest to come from foreign insurance players? And could this be in the form of fresh licenses or acquisition of stake in Indian insurers?
Yes, it will happen in both. Because the existing players are also keen on increasing their stake to 100%, one. Second is there are many life insurance companies and general insurance companies in the world which are much, much bigger, which have not entered the insurance area in the world, in India as of now. So they are also waiting for the 100% stake to enter. Just take example of Berkshire Hathaway, United Health, Ping Insurance of China, and so on and so forth. There are many insurance companies which are much bigger. They are awaiting 100% FDI approval because you know what happened, if you remember, Yash, when it was made to 49, there was slight amendment where the Indian ownership and control was required. Now that is something which has created a problem. So the foreign insurance companies probably are of a view that if Indian ownership and control continues or is again restored, then they are not interested. Although it was removed when stake was increased to 74%, but still from 26 to 49 when it was done, this is something which came in the way of foreign insurance companies entering the insurance market.
And to your understanding, should this approval be given on an automatic basis or should it be a case-by-case approval mechanism which should be put in place?
No, it should be on automatic basis because even for 74% or 49%, it was on automatic basis. So why there should be a change? We should not keep changing our policies back and forth.
Correct. A word on the Insurance Amendment Bill also, and the most important aspect under that bill is composite insurance license, which allows cross-entry of insurers. Do you think a very stringent process of approval should be put in place? Because, underwriting a life insurance policy is a lot more complicated than underwriting a health insurance policy, and hence a cross-entry should go through a stringent examination. And do you expect significant shift in terms of the players, entering the other side of the business as well?
See, some of the players are too keen on entering, like LIC. LIC agents are marketing insurance products of other general insurance and health insurance companies. So if at all, and they have a strong agency base. So if at all they enter this market, obviously their agents will sell their own products instead of going somewhere else. And again, there are many insurance companies which are keen on marketing the products of other lines of business. So there is definitely a scope. And they have got everything in place. See, accounting is in place, risk, all criteria are in place, outsourcing is in place. So what is required is only separate accounting of general insurance and life insurance business. Once that is done, and which is very easy to do nowadays, it's not difficult. So, and if you remember, before 1971, when the four general insurance companies were carved out, New India and others, LIC was doing this business. LIC was doing general insurance business. But that time, of course, the business was very, very small. What is important today is, because of IT, it is easy to keep accounts separate, and it is not difficult to manage these businesses by insurance companies.
So, of course, not difficult to manage the two businesses, and there could be a significant shift. One point under the insurance amendment bill is also reduction of the initial capital to start business. With that particular proposal and the approval there, do we run the risk of certain non-serious players also entering the insurance space, considering that the initial capital requirements could come down significantly?
See, nothing can be ruled out. But yes, you tell me one thing. Before nationalization of insurance companies into LIC, the regulator was not strong. The provisions were not in place. The investment norms were not in place. Now everything is in place. So it is very difficult to, bypass any of these rules and regulations. And let us give a chance. I'll give you an example. Dubai has got 68 insurance companies. What is the population of Dubai? And out of that, 60 are in profit. UK has got more than 400 insurance companies which are working. What is the population of UK? 1/7 of India. Why we cannot have, or we should not have, more insurance companies? And that is possible if line of business wise or region wise licenses are given and the capital requirement is reduced. Although it provides only 100 crores for life insurance and general insurance and 200 crores for reinsurance, you will find that all the insurance companies, without exception, have more than 1,000 crores of capital. Because to do more business, you need more capital. So to start with, there is no need to have such a huge amount of capital. If you are doing a business which has got a short tail, as we call it in technical term, means like motor business, where the claim is going to come in a year or two, or maybe in case of health, in a year or two. Why do you need so much of capital? If less capital is given, see, capital is always scarce, especially in developing countries, it is very, very scarce. So if at all option is given to start insurance companies, take example of all these distributors of cars. They can have their own insurance company and they will have their own client base. What is wrong in that?
Correct.
And controls can be established. Now regulator is very strict on this.
Correct. I mean, the regulator has also been saying that to cater to a population of 1.4 billion and counting, we need many more insurance companies of different sizes to enter. Right. And I think the capital requirement will be an important step in that direction. But of course, there are many more interesting points under the insurance amendment bill also. And all of those will be very keenly watched, potentially being tabled in the parliament session and having an approval and how things pan out for the sector post that. But thank you, Mr. Sate, for your time today. And with that, it's a wrap on this edition of NewsCentre. More news and updates lined up as we come back from this short break.